U.S. Treasury Secretary warns Iran of toughest sanctions in history that could lead to collapse of Iranian government. Iranian parliament speaker has in fact cautioned his country to prepare for what he calls cruel sanctions imposed by U.S.
U.S. indices are on the rebound. The S&P 500, Nasdaq and Dow rise with narrow margins even as investors continue to remain cautious on the back of West Asia tensions.
Nifty sees a second straight weekly decline, down around 0.5%. Metals led sectoral gains, rising 1.7%, followed by realty at 1.6%. IT was the biggest drag, down 2.8%, while FMCG and PSU banks also fell sharply.
General Atlantic is in advanced talks to acquire PAG's 54% stake in Nuwama Wealth for around 17,000 crore rupees. Sources say that General Atlantic has submitted a non-binding bid and is conducting due diligence.
In a bid to curb rise in sugar prices ahead of the festive season, Centre has asked all states to ensure compliance of sugar stock holding limit.
The government could add more components to the electric components manufacturing scheme. Keynes, Amber, Syrma and Samsung were among those in discussions. The scheme could be reopened for fresh applications.
Hello and welcome to India Tonight. I'm Shubhani Gharat. Joining us from Chennai is my colleague Jude Sanit. Now, Jude, the Iranian conflict is in fact widening beyond the battlefield, with actually U.S. escalating economic pressure on Tehran, Lebanon pushing for full Israeli withdrawal, and fresh concerns emerging over the strain on U.S. warships deployed in West Asia. Sumita brings us the latest from across the region.
That's right. In fact, in a fresh escalation, what Treasury Secretary Scott Bessent has essentially stated reportedly is that the U.S. is going to unveil fresh sanctions, economic sanctions on the Iranian government. And Secretary Bessent said that these sanctions in themselves are going to collapse the Iranian government. And there's not going to be any need for fresh military escalation or military push. Remember, this is coming in just a couple of hours after U.S. President Donald Trump also in a similar tweet mentioned that there will be very heavy economic sanctions that will be unveiled upon Iran. And it's not just the Iranian country on which these sanctions will be unleashed, but he also said that any entity, any government and any country that supports or aids the Iranian government or the country of Iran and helps them financially or in any other way will also face these economic sanctions. Remember, China has reacted to this latest piece of news reportedly, and it is said that these sanctions are not going to sort of help in resolving the war. And of course, the Iranian side has castigated the U.S. government and of course its spokespersons who have spoken about these economic sanctions, suggesting that these are not done. And in fact, they also say that these are illegal and inhumane. In fact, if I were to quote Mohammad Ghalibaf, the Iranian parliamentary speaker, he said that Iran must plan to overcome these cruel sanctions after U.S. Treasury Secretary Scott Bessent announced these economic sanctions. And he said, and I quote, "If you look at resources and raw materials of Muslim countries, you will realize that our enemies are coming to plunder them. So we must plan for cruel sanctions in this situation so we can overcome them." Remember, he's currently on a trip to Iraq. So, of course, this fresh escalation is not going to be militarily, but of course, there will be economic sanctions from the U.S. side first, and then we'll have to see how the Iranian government responds to those sanctions. And of course, on the back of that, we're seeing oil cross that $93 mark as well. And of course, there's been volatility on that front too.
Well, thanks, Sumita, for that roundup of the situation in West Asia. And despite those geopolitical uncertainties, U.S. markets, it seems, are on rebound mode today. In fact, investors are looking to find their footing after yesterday's sell-off triggered by rising Treasury yields. The Dow Jones is up more than 0.5%, while the tech-heavy Nasdaq is also in the green, gaining more than 0.1%. The S&P 500, meanwhile, is also trading higher, up more than 0.2%. But Shivani, back home in India, it seems the centre is stepping in after sugar prices seem to be hitting the roof.
Jude, now sugar prices have increased in recent weeks from 48.18 rupees per kg on 20th July 2026 to 55.70 per kg on 20th August 26. The government is in fact closely monitoring the situation and has taken a series of measures to ensure adequate availability of sugar and stable prices for the consumers. Now, while clarifying, rise in sugar prices cannot be attributed to ethanol, we have also Kuldeep, in fact, with more details on this.
Well, amid the rising prices of sugar across the country, the government has come out with a statement. It clarified that adequate sugar stocks are available to meet domestic demand, and it also asserted that the government is committed to protect consumers. The government further stated that the sugar production for the current season is seen nearly 306 lakh metric ton, which is quite low as compared to the initial estimates of 343 lakh metric ton. The government also said that to ensure the availability of sugar, it has asked all the mills and state governments to start crushing from 15th of October, and this will raise sugar production by 10 lakh metric ton. The government further stated that it has taken a number of steps to ensure the availability of sugar and to control the prices. In fact, it has allowed duty-free import of 10 lakh metric ton sugar, and it has also passed an order which states that bulk consumers will not be permitted to hold sugar stocks for more than 15 days. So it has tightened the sugar stock holding limits. Additionally, the government has also asked all the chief secretaries and all the state governments, in fact, to conduct physical verification to ensure the compliance of this sugar stock limit order and take necessary action as per the Essential Commodities Act of 1955. The government has also clarified that diversion of sugar for the ethanol production is not the reason behind this rise in sugar prices. It in fact stated that the diversion of the share of sugar for the ethanol production has been reduced from 12% in 2022 and 23 to nearly 9% in 25-26. The government stated that it has been taking all the steps to ensure that the prices of sugar do not skyrocket. And in fact, if you talk about the prices, as per government data, the prices of sugar right now is 56 rupees per kg. That is on all India basis. However, as per the government data only, the prices of sugar has been seen nearly 64 rupees per kg in some states. So this has been the status of the sugar prices, and there has been more than 20% increase within a month in the prices of sugar.
Right, thanks for that, Kuldeep. But shifting focus to the startup ecosystem next, Prime Minister Narendra Modi has interacted with the CEOs and founders of 20 Indian space startups as the government looks to accelerate the growth of the country's private space sector. Now, the startups highlighted growing global interest in technology being developed in India, while the Prime Minister himself called for wider applications of space tech to improve people's lives. My colleague Sumita is back with us with more details about the Prime Minister's meeting with those CEOs.
That's right. Prime Minister Narendra Modi met with the CEOs of at least 20 startups, 20 space startups is what I'm talking about. And in fact, they took stock of the rapid progress that's been made in the sector, and that's currently being made as well as we speak. So, of course, as part of that entire group of startup founders who met with the Prime Minister, that includes participation of CEOs and founders from 20 startups, like I said, and that includes Skyroot Aerospace, Agnikul Cosmos, Pixel, Dhruva Space, Galax I, Bellatrix Aerospace, Tigantara, and in fact Matantu Space, Astrobase, and several other startups in the country as well. And of course, these startup founders appreciated the kind of policy support that they have received for the kind of joint strides that they're taking in the ecosystem. And in fact, they also appreciate the opening up of the space sector to private participation and said that it has created multiple opportunities for founders. In fact, the Prime Minister called for wider applications of space technology to improve lives of people, because remember, when we talk about digital technologies or technologies otherwise, it's always about improving the life of the very last mile. So of course the Prime Minister did speak about the kind of social impact that it can have on lives of people. Then of course the Prime Minister also emphasized between greater collaboration between the space industry and several other sectors. The Prime Minister also said that space sector sector can become a magnet for global talent companies and investments. Now, it's also important to note at this point in time that, space has been one aspect where there has been a lot of investment. It has attracted a lot of VC interest as well. And of course, funding as well in the ecosystem has been rising. So whether it's deep tech, whether it's space, all of these areas where this government is specifically focused on sort of boosting this space, and like the founders said, that private participation, which is why has increased, because there is government support for the sector that's also coming in. So whether it's related to funding or whether it's related to ease of doing business, that surely is happening.
Right. So India's focus on the space sector. On that note, it is time for us to slip into a very short break on India Tonight. You don't go anywhere. We'll be right back on the other side.
Welcome back. You're watching India Tonight with my colleague Shibani and myself, Jude Sanat, right here on ET Now. Let's quickly take a look at how markets fared today. In fact, the week saw the Nifty end lower by about 0.5%, even as mid-caps also slipped marginally, while small caps, rather, are putting out an outperformance. In fact, the Nifty Metal and Realty emerging as the joint top sectoral gainers, while the Nifty IT was the top sectoral loser. Meanwhile, Nifty Defence continued its strong run, closing in the green for the third straight week. My colleague Snehi is here as always with her market roundup.
Well, yes, absolutely action-heavy week gone by. We've got moves coming in on the market, lots of fresh paper, and the IPO market was up and buzzing. You've also had rules on cash, SEBI crackdown on that front, SEBI FNO survey, lots of RBI as well as FOMC minutes as well. So lots to watch out for, and that everything shaped the week gone by in the sense that we managed to hold on to the 24,250 mark on the index. Remember, the first couple of days of the week were heavily under pressure. We saw a little bit recovery, but nonetheless, we ended absolutely flat with a hint of a negative bias on the Nifty for the week gone by. Sectorally, it's a joint tie between Nifty Realty and Metal as the top sectoral gainer. Both indexes up 1.8%. Nifty Metal was led higher by Welspun, Vedanta, Hindustan Zinc. That big order win for Welspun led the entire index higher. And Nifty Realty was led higher by Prestige Enterprises, Brigade. You had Godrej Properties that did well. So these were some stocks to watch out for. This was followed by the move in Nifty Bank, Defense, Finance, and that's the kind of move we've seen on the index. What's ended absolutely flat is the Nifty Oil and Gas Index, but then we've seen some bigger cuts on Nifty IT, FMCG, PSU banks, Nifty Rural, because all of these indexes have ended with cuts between 1 to 2.5% each. Nifty IT was the top sectoral loser in the week gone by with a cut of 2.6%, and that was dragged lower by LTM, HCL Tech as well as OFSS. Remember, in the week gone by, we had a downgrade coming in by CLSA on some IT stocks as well. So those were some of the triggers behind the fall in the IT index. You've got Nifty IT, FMCG, PSU Bank, Pharma, Auto, Oil and Gas, all of these indexes that continue to decline for a second straight week. And you've got Nifty Metal and Bank that ended in the green this week after ending in the red in the week gone by. So 0.5% cut coming in for the Nifty 50, absolutely flat for the Nifty mid-cap, but the outperformance is seen in the small cap end of the market, 1.25% uptick for the week gone by, and that in a nutshell sums up the kind of action we've seen. For the week, we've closed at 24,252 to be precise on the Nifty 50.
Right, Snehi, thank you so much for those details. Now on to an ET Now exclusive. General Atlantic is in advanced discussions to acquire a majority stake in Nuwama Wealth Management from Asia-focused investor PAG. A due diligence is currently underway from GA that has put a non-binding bid for the deal. My colleague Anurag Joshi is joining us with more details on this.
U.S. private equity investor General Atlantic is in advanced talks to acquire a majority controlling equity stake in asset manager Nuwama Wealth Management. The GA is proposing to acquire about 54% equity stake in Nuwama Wealth Management from PAG, which is an Asia-focused investor. And PAG is currently owning the stake in Nuwama through entities Pegak Ecstasy and Asia Pragati. PAG has been seeking to offload its equity holding in Nuwama since last year. And the deal had slowed last year, but in the recent past, it's picked up momentum, and Nuwama has emerged as a serious contender in the transaction. Nuwama has currently put a non-binding deal in the transaction and is also doing a due diligence on GA has put a non-binding bid for the transaction and is also doing due diligence for Nuwama. But this non-binding bid could become a binding bid if following the deal, the due diligence, the deal moves forward. Now, to give you some background about Nuwama Wealth, it manages 5.3 trillion rupees of assets totally, and the deal value, the value of PAG's stake in Nuwama for the purpose of the transaction, that's pegged around 17,000 crores. That's $1.8 billion. PAG had acquired a majority stake in Nuwama in 2021. That time, this company was called Edelweiss Wealth.
Moving on, IT Minister Ashwini Vaishnav has launched the Mobile Manufacturing Scheme 2.0 that was approved by the Cabinet back in July. The scheme, with an outlay of around 62,500 crore rupees, aims to boost indigenous mobile phone manufacturing. Let's listen into what the minister had to say during the launch of the scheme.
Practically, mobile phone production, which was about 22 lakh crore, will be doubling in this period. It will go up to 40 lakh crore. That's a big thing. And as you know, last year, smartphone as a category, as a product, was the largest exported item out of India. That position will be retained, that position will be further strengthened. Electronics manufacturing became the third largest category. That will also get sustained now with all these initiatives. To have an Indian brand, we need the following inputs in it. First, Indian design. 2, that design has to be Indian owned. 3, the brand has to be Indian owned. 4, the manufacturing ecosystem. The manufacturing ecosystem is in place now already. That entire ecosystem is right now, we have it. Design, we have asked multiple players, to be precise, 3 players, to come up with design options. The challenge we have given them is the design has to match the best in your segment. It cannot be a design which cannot compete with the best in your segment.
Right now, the exclusive sources tell ET now that the government is preparing to widen the scope of its electronics component manufacturing scheme, with more components likely to be brought under the incentive framework. The Ministry of Electronics and Information Technology, or METI, held discussions with industry players including Keynes, Amber, Sirma and Samsung last week to identify additional modules and components that could be included. My colleague Sumita is getting us more details on this.
That's right. In fact, exclusive sources have told ET now that there could be a possibility of the government likely looking to expand the scope of the electronics components manufacturing scheme. And this is essentially aimed at covering more components under the scheme. And in fact, in this regard, we're given to understand from sources that the IT ministry and representatives from the IT ministry had discussions with the industry a couple of days back, and industry players included representation from Keynes, Amber and Sirma, amongst other companies. And in fact, they held discussions with government. These discussions focused on identifying additional modules and components that could be added to the scheme. So in terms of the components that were discussed, well, battery management systems, PCB drill bits, CCTV enclosures and materials could be some of the components that, of course, were part of the discussions that the industry is seeking to get included. In fact, the industry is also seeking a longer gestation period for PCBs, citing extended production cycles. In fact, what sources have also told us that the scheme could be reopened to invite fresh applications for these additional components. And with regard to that, the government may issue an addendum to expand the scope of the scheme. Remember, in July 2026, an addendum for optical transceivers was notified. Now, as far as the ECMS is concerned, or the Electronics Components Manufacturing Scheme is concerned, well, it was notified in April 2025 with the 22,919 crores of financial outlay, which was later expanded to 40,000 crores in the union budget to accommodate the massive industry response. In fact, there is room to accommodate more companies and bring in additional components under the scheme, under the expanded scope of the budget. As of now, at least 106 applications covering 30 products across 15 states have been approved.
Moving on, the Ministry of External Affairs has said that they have in fact denied political clearance to Telangana Chief Minister Revanth Reddy's visit to the United States. In fact, the ministry added that clearance is generally given when the program proposed is appropriate to the office held. In fact, Reddy was supposed to visit the US and the UK with a Telangana Rising delegation for 10 days. He is presently in the UK and is scheduled to return on the 23rd of August. Let's listen in to what the MEA spokesperson had to say on this issue.
Let me say that the visit of chief ministers, as indeed of other dignitaries, are assessed by the Ministry of External Affairs in order to accord political clearance. The program proposed in such cases should be appropriate to the office held and the purpose of the visit. In this particular case, that was not so in respect of the United States, and therefore the clearance was denied, not given. Incidentally, let me also tell you that clearance was given for his visit to the United Kingdom.
Well, on that note, it is time for us to slip into a very short break. You don't go anywhere. We'll be right back.